With these threats and continued attacks in the Red Sea, shipping rates are up thousands of dollars. It's costing $7,000 to ship from China to Europe and $8,000 from Shanghai to New York. These high costs are creating great economic anxieties and prompting inflation throughout the nation, mirroring the early years of the pandemic. Joining us now on this is Henry Byers, Director of Pricing at KCH Transportation. Henry, thanks so much for being here on this. Can I ask, bottom line for Americans at home, is this going to mean higher prices, and where specifically will consumers notice this?
It certainly seems that way. Seeing as how these container rates have increased so dramatically. I mean, we're looking at, global container rates being up over 240%, but specifically the rates here to the U.S., whether it's the East Coast or the West Coast, have gone up, like you mentioned, thousands of dollars. And it certainly seems like that's going to translate into quite a bit of congestion here in the U.S., and which will certainly translate into the surface side modes of transportation, most notably truckload transportation. So and that will impact all the goods that transport in those trucks, which we've estimated that of containerized imports, 70% or so end up in a truck in some form or fashion at some point in time in their life cycle. So we're looking at most of the things that were impacted by that, like you'd mentioned, that post-pandemic or during the pandemic with all the stimulus, the things that were most impacted during that time look well positioned to be impacted by those price increases as well.
So are we talking about things at the grocery store and just everyday goods like that you would find at Walmart, furniture, everything else?
The latter more so than the former, but certainly, produce won't be, excluded from that bunch. I mean, a lot of the things you see at the grocery store will certainly be impacted by the greater truckload markets, the rail markets, seeing that upward pressure on pricing. It really, none of the goods that you're going and purchasing as a consumer will necessarily be safe from those price increases.
When would we see those prices go up as a result of all of these issues in international waters and delays in shipping, the supply chain, et cetera? Or are we already seeing the impact of that?
Probably not already seeing it. However, companies are very in tune with how this played out during that pandemic cycle of price increases and then decreases. And for the truckload market specifically, we've been in a pretty serious prolonged freight recession. However, those containers that are on the water receiving those rates and shippers being a little bit lower than they expected on inventory is certainly causing quite a bit of freight to come into the country. If you look at imports year over year, some of these ports like Los Angeles and Long Beach and Savannah publishing really strong numbers heading into peak season. And so those containers that are on the water will load into trucks, load onto the rail, and move inland to their final destinations. And so when you look at how that plays out from a pricing cycle, we're likely to see those truckload load rates start to increase here prior to the July 4th. But after that, it probably will be a month to 2 months before you start seeing those significant price increases. And it depends on really who you ask if the truckload market's positioned for quote unquote bull run in the second half. But I certainly think that the issues that are going on the water right now are brewing in a way that it certainly could cause a significant increase in truckload prices, where going into this year, most had expected prices to stay relatively low in the truckload sector.
Okay, so I understand. So Henry, in about a month or 2 months, we should start to see these prices going up. That's bad news for a lot of Americans who say, hey, these prices are already really high. Are the Houthi rebel attacks the main factor to blame for these price hikes?
It certainly has started it. So while the inventory glut coming out of 2022 that some of the major retailers, you probably heard in some of the earnings calls, had led to them moving away from that just in case inventory management style to more of that just in time, which is more of what we would have seen prior to the pandemic. And so that the inventories being unexpectedly low right now have also caused a demand fluctuation, where now that you've had the Houthi attacks and kind of the impacts that it's had on global container capacity, now bouncing up against an increase in demand. And so when that happens, the environment is ripe for price increases, because again, capacity is low, demand's high. And then when you see that continuing into peak seasons for the next couple of months, we could see container rates hitting close to where they were in the worst part of 2021 in the pandemic.
Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.